You're listening to The Voluntary Life, where you can hear ideas for finding freedom in an unfree world. Visit thevoluntarylife.com to connect with the show and hear all past episodes. Here's your host, Jake.
Hi everyone, it's Jake here. Welcome to The Voluntary Life. This week's episode is about the role of cash in investing. So this will be relevant for anyone interested in financial freedom and anyone getting into investing or already investing, because everyone who invests has to deal with cash in some way. But the question is, how much of your portfolio should you keep in cash, and where should you put the cash? What's the role of cash within a portfolio? And in general, how should you think about cash? So that's what I'd like to cover in this week's episode. But before we get to that, first of all, I want to say a huge thank you to my new patrons. This is my second week of running the Patreon campaign, where you can become a patron of the show and receive a whole bunch of rewards and bonuses. So I want to say a big thank you to these people who became patrons over the last week: Stephanie M, Adam E, Fernando C, Adam K, John C, Pontus, Ulrika, and MKC. Those are the people who became patrons at the time of recording this episode. If you've signed up but haven't heard your name, I will thank you in the next show. In other news, that last patron who signed up, MKC, pushed us over the first target that I set, which was $120 a month. And I had said on the Patreon page that when we reach that first target, I am going to upgrade the RSS feed. This is going to have a whole range of benefits, upgrading the RSS feed. It's going to mean that the feed will work much better on different podcatchers. I know that some listeners are able to click directly on the show notes and get the hyperlinks to things that I've linked to, and other listeners, depending on which podcatcher you're using, you can't click on the links. So this is going to work better across different platforms, hopefully. And it's also going to remove the limit on the number of shows that I can put in the feed. So the feed will get longer and longer. At the moment, there's a technical limit to the number of shows in the feed, so it only holds 150, and the rest are all archived. You can still find all of those shows on the website if you click through. And if you prefer, you can also get an archive feed by becoming a patron. That's one of the bonuses. So for convenience, if you just want to be able to listen to over 150 shows now in the archive feed, become a patron and I will send you a link to the archive feed. But in future, the main podcast feed is just going to get longer and longer, and all of these changes are going to take place when I upgrade the back end and change the podcast feed. So now that we've reached the target, I'm going to implement that. This is something I'm going to have to do slowly and carefully over the coming weeks, because when you upgrade a podcast feed, you can actually lose all your subscribers if it doesn't go well. So I'm really hoping that doesn't happen. If for some reason in the future you're listening to this and wondering whatever happened to The Voluntary Life, then check the website and see what the new feed is, because I'm hoping to be able to switch the feed without losing everyone. But it is a tricky process, so I'm going to implement it over the next month. By the end of July, we will have a new podcast feed. The next target to reach is $240 per month. And when we reach that, I'm going to totally upgrade the website. So please do become a patron and help support the show and get all of the great bonuses that I'm sending out to patrons. Over the last week, I sent out another patron-only episode, this one on how to do a daily review, and I sent out some more Evernote templates for productivity and some OmniFocus templates for productivity and lots of other goodies too. So go to patreon.com/thevoluntarylife or find the link on thevoluntarylife.com to support the show on Patreon, and you can get all these bonuses too. So let's talk about cash in investing. What I'm going to do is explain to you what I've learned about the role of cash, and my approach comes directly from the permanent portfolio investment strategy or philosophy that was developed by Harry Browne, and he's written about it in a couple of books. The short introduction is called Fail-Safe Investing. I'll put some links in the show notes for people who are not familiar with this approach. But it's a passive investing approach that involves holding 4 different asset classes: stocks, bonds, cash, and gold, in roughly equal amounts, and then rebalancing whenever one of those different asset classes goes above or below a rebalancing band. I've spoken about this on a few previous podcasts, but this is an approach that I find helpful for myself, And I think it's interesting, whatever particular investment strategy you adopt, because the permanent portfolio has quite a lot of rationale and clear reasoning underpinning all of the different aspects of this investment strategy. And it also is a strategy that holds a lot of cash. 25% of a permanent portfolio is in cash. So I think by understanding how this one particular investment strategy treats cash, you can also think about what your own approach to cash is, how you should hold it, and so forth. Because whatever you choose to do regarding investing, you are going to be dealing with cash in some way. So you do have to decide how much cash should you hold and where should you put that cash, and think for yourself about what the role of cash is within your investment strategy. And Harry Browne thought a lot about this and provided some very thorough analysis and reasoning behind all of the decisions that he made about this particular investment strategy. So I'm going to explain cash from my perspective, which is adopting this Harry Browne approach, and hopefully that will be food for thought for you to think about what your own strategy regarding cash is. So firstly, as I mentioned, everyone has to deal with cash at some point. Even if you intend to invest 100% into a stock market index fund or some other investment, you are going to be dealing with cash at some point. You're going to get returns in cash, like dividend and interest payments. And ultimately, we all have to spend cash. Maybe one day, cryptocurrencies will take over, but in the meantime, we all need cash in order to actually live. So everyone has to deal with cash in some way. But we are also in a very strange time when it comes to cash, because in the last 10 years, since the Great Recession of 2008, we've been living in a time where interest rates have been held artificially low by central banks in the West. So we've had extremely low interest rates, and that has meant that cash has provided very low returns. Normally, cash is a low return asset anyway. It's considered a low risk asset, but it has relatively low returns. But in the last 10 years, they've been especially low. And cash is also very vulnerable to losing value through inflation. When central banks inflate the money supply, the value of cash in your pocket declines. You can buy less with it. So for these reasons, cash is generally considered to be a bad asset. And the sort of cliche is cash is trash, and that you should put your cash into some other investment like stocks or bonds or whatever, because you get such low returns from cash. And over time, with inflation, you can actually get negative real returns because the value of the currency is depreciated by central banks. So given all of that, why on earth would you want to hold cash? Well, when it comes to the permanent portfolio strategy that Harry Browne developed, he outlined a whole series of reasons why you would want to hold some cash. Some of these are just very practical, straightforward reasons. Firstly, Harry Browne was very concerned about stability, and cash provides some stability to a portfolio. If you invest in very volatile assets, cash is low return, but it's also low risk. So his approach was very conservative, and he wanted to iron out volatility in investment. And so that's one of the reasons why he suggested some portion should be in cash. But that's not really one of the important reasons. There are more interesting reasons to hold cash than that. Firstly, cash provides you with ammunition for rebalancing during market declines. So if you think about this, if you're 100% invested in stocks, and then there's this massive stock market crash, let's say 40% decline or 60% decline or something like that, that is a time when there is effectively a fire sale in stocks, and you can buy a huge amount for cheap prices. But you can only do that if you have cash. If you're already 100% invested in stocks, for example, then you're not going to have the cash to take advantage of volatility swings like that. So that, I think, is a very good question to ask yourself when you have a particular investment strategy. What are you going to do if there's massive price drops in one asset that you're heavily invested in? And Harry Browne's answer was to be so diversified that you are able to take advantage of volatility. And in particular, he advocated holding quite a lot of cash so that you have ammunition to buy during periods of massive discounts. Another reason to hold cash is just a very practical one, that cash acts as an emergency reserve for life's unexpected events. For example, a lot of people who pursue an investment strategy where they are investing 100% in stocks, they're taking their income from their work and they're putting all of their savings into the stock market, for example. But if you want to be prepared for some event happening, like, for example, losing your job or having a health emergency, then you need an emergency fund, and that fund needs to be in cash. Obviously, you could try and sell some of the assets that you have that were not cash in order to cover yourself during an emergency period. But if you do that, then you're probably going to have some tax liability. And depending on what the asset is, it might be really hard to sell. I mean, for example, if you've got all your money tied up in property, then you may not be able to sell it for months and months. So cash is a great asset to have for emergencies. And so if you're going to hold some proportion of your assets in cash, then the question is, how much should that be? Another reason to hold cash is if you are financially independent and if you're following the kind of early retirement model where you're not living from income from a job, then ultimately you're going to be living from your investments. And that means you're going to be living from cash. So you need to hold some proportion of your net worth in cash to be able to have cash to draw on and live from. So those are some of the basic reasons to hold cash that Harry Browne thought about when designing the permanent portfolio. But he also had a kind of deeper reason why you might want to hold cash. His whole approach to investing was to be prepared for any eventuality, any economic eventuality that might occur. So he wanted to have a diversified portfolio and to hold different asset classes that would do well in different economic conditions. And interestingly enough, there is one kind of economic condition where cash is really the only asset that does well. It doesn't even do that well, but comparatively speaking, it does far better than others. And that kind of economic condition is one that we haven't seen for a long time, but it can happen. And it's what is called a tight money recession. This is when a central bank keeps interest rates very high despite a weak economy. And they do that typically because they're worried about inflation. A really good example of this was in the early 1980s, after the massive inflation in the US and in the UK as well, actually. In the early 1980s, there was a couple of years where there was a tight money recession where all other assets did really badly, and cash was actually the one asset that did relatively okay. So Harry Browne's idea was to try and prepare a portfolio that would weather any storm, basically, that would be okay in any eventuality. As I said, he was super conservative, and his whole idea was to try and iron out volatility and keep you safe from catastrophic losses. And there is one particular circumstance, a tight money recession, where holding cash can really get you through when all your other assets are losing value. I think that's very worthwhile thinking about whatever investment strategy you adopt. What would happen to you in different economic conditions? And at the moment, the idea that we'd have a tight money recession seems like a crazy, far-fetched thing, but it could happen. And so what would happen to your particular investment portfolio if we were in that condition? So that's some of the ideas of why you would hold cash in an investment portfolio that Harry Browne came up with, which I find very convincing myself. And that's why I've adopted this particular approach. I hope that by talking in general about the concept of holding cash and some of the questions that you could ask yourself, this will give you some food for thought, regardless of your investment strategy. I happen to follow the permanent portfolio because I think it makes sense to me, but you can choose whatever strategy you think makes sense to you. Obviously, your money is your responsibility, and I'm not a financial advisor, so do whatever you think's best. But whatever you choose to do, you're going to need to decide some of these questions. Questions like, how much of my net worth should I hold in cash? What am I going to do in terms of, for example, having an emergency fund in case things go wrong? What am I going to do in terms of having some ammunition to buy other investments if there's a fire sale through a stock market decline, for example? And I guess another thing that you need to think about is when and how you're going to rebalance in and out of cash. I mentioned briefly in the beginning that the permanent portfolio is a passive investing strategy that holds different asset classes and then rebalances in and out when one particular asset class becomes too big within the portfolio. And in general, the rebalancing band is usually 15% to 35%. So the idea is if you're getting to less than 15% cash, then you would probably sell some of the assets that have been performing really well and rebalance so that everything is back to 25% each. But if you don't hold 4 different asset classes, if you only hold, let's say, some cash and then the rest of your money is entirely in the stock market, the question is, how much cash do you hold and when do you choose to rebalance? When do you choose to take profit, basically? So I hope that's been helpful. Let me know what you think. I'm curious to hear your response and whether or not you'd like me to talk about different asset classes in investing in future. There's something I can definitely talk more about: holding bonds, holding stocks, holding precious metals, and even holding cryptocurrencies and other alternative assets. So let me know what you think. I'm going to release another bonus episode for my patrons this week. And in that episode, I'm going to continue this discussion of cash in investing. And what I'll do is tackle some more technical questions about cash in investing. The permanent portfolio approach provides some useful ideas about how to hold cash securely. Because obviously you don't want to keep cash under your mattress, but there are also problems keeping cash in a bank account, particularly the risk of bank bail-ins and a meltdown of the financial system. So Harry Browne had some useful ideas about holding cash-like assets that are more secure than just having money in your bank account. So I'm going to talk about that, and I'm also going to talk about some of the differences between cash and holding other assets within investing. So for my patrons, that will be at the Rockstar Entrepreneur level that I'll be releasing that podcast. Have a look out for that this week. And if you're not yet a patron, but you'd like to hear that podcast, then don't forget you can become a patron and get that podcast and all the other patron bonuses that I've already made. That's all for this week's episode. I hope you have a fantastic week, and I'll be back next week with another episode.
Thank you for listening to The Voluntary Life. If you have feedback about the show, please email jake@thevoluntarylife.com. If you enjoyed this program, please share the podcast with your friends or click the donate button on thevoluntarylife.com.